So if the stock market is finally beginning to go up, why is there so much money in money markets? What's going on, guys? It's Ricky with Tactical Solutions, and I wanted to share this article that I came across today. I found it to be really interesting, and it talked about that investors are in disbelief. This article is 2 months old, so I looked a little bit more for an update on what the current cap is for money markets and what it amounts to. This is 2 months ago, and money markets were sitting at nearly $5 trillion, around $4.8 trillion in money markets. And I'll explain what that means in just a little bit. Right now, again, 2 months later, we are at 5.5, not billion, not million, trillion dollars in money markets. Now, what exactly is money markets? Well, again, anytime that investors or big institutions with a lot of money don't want to put money or keep money in the stock market because they view it that it could be too risky or we might be entering a potential recession, meaning a downturn, investors or banking institutions can put money in money markets. One of the most popular money market vehicles is Treasury Bonds. A lot of you guys have heard in the past couple of months, Treasury Bonds have become very attractive because of the rate that they were actually offering for a potential return. Again, another huge reason that something like Silicon Valley Bank became very unattractive and began to fail just a couple months ago, right? The thing that I wanted to share with you and kind of take a step back to ask that question is, even someone like myself, right? We focus so much on the day-to-day and on the week-to-week as I'm trading the market. And sometimes we need to take a step back to kind of look at the overall big picture. Why is it that if the market is going up, that huge institutions with trillions of dollars, right? $5.5 trillion. Why is it that they're not buying the dip like all of us, right? Do they know something that we don't? Well, it's the idea that it is almost certain that we will be entering a recession with this economic slowdown. And I want to show you exactly what it is that I mean. Again, please feel free to do your own due diligence. And it's not that, oh no, the same thing that happened in 2008 is going to happen today. It's not what we're saying, right? But when you look at the actual data, again, and what everything has been now focused on, the focus for the Federal Reserve is no longer so much on the rate of inflation because, we went from 6% to 5%, and it looks like the fight against inflation, the Federal Reserve is winning. But now we're beginning to see an economic slowdown on labor markets and, of course, on an overall markets, right? We can see retail sales were down. It wasn't anything too significant, but we did see that they were down. Treasury budget, huge $378 billion were reported, right? When it comes down to the non-farm payrolls, again, this was a very big report that we were wanting to pay attention to. We could see that we came in at 236,000 versus the expectation of 239,000. So again, a slowdown. Everything is pointing. Again, that was from last week, right? The unemployment rate came in a little bit higher than what it was the month prior at 3.4%, although it came in better than expected, came in at 3.5%. So the idea is, the question that I just wanted you to ask yourself is, if there's $5.5 trillion sitting in money markets, meaning markets, or money that is not being invested in individual stocks like Tesla, Apple, or Amazon. Why? Why is it that more now than we've seen in a really long time that there is so much money out of the actual stock market? That is the thing that I began to think a little bit more about. It's, is there another leg down? Kind of the question that I'm beginning to ask myself. And is it something that these banking institutions either know and or are preparing for that justifies not having money in the market right now? I thought it would be something kind of to share with you guys where it's food for thought, right? Especially as we see that the NASDAQ market is going back to retest. Everything right now is pointing bullish, right? We've been forming higher lows just like we did here, right? If you look a little bit on the larger time frame, on the 4-hour time frame, this is QQQ, which is a NASDAQ ETF. We peaked, we pulled on back, we formed a higher low. That's a great sign for the bulls, right? It's a great indication that markets could continue to go up on the technical standpoint. And we're right now kind of consolidating up here at a resistance of right around 320. We are looking extremely bullish, especially with everything that's going on with inflation, right? We reported a lower inflation rate last week. I mean, everything is looking so good. So it just doesn't make sense on why banking institutions are so widely invested in other areas such as money markets versus the actual stock market, right? They're choosing to play it safe because on average, these money markets offer about a 4% return yearly. But why, right? If you can see that Apple and Amazon and Tesla are performing so well, why? Why is it that they are not partaking in the stock market? And the concern is because we're going to be entering a potential recession. So I thought it was an interesting article. I mean, you guys can feel free to read it yourself to learn a little bit more about it. So investors in disbelief, $5 trillion cash sit on the sidelines in money market funds. Again, I found it to be pretty interesting. You guys can let me know down in the comment section, but at least for myself, right? Because sometimes I feel like I focus so much on the day-to-day and or on the week over week that I don't allow myself to kind of take into consideration kind of the overall big picture and what is actually going on for those larger plays, right? And again, it's an area of opportunity for myself, and I feel like this article just reminded me of it. So let me know down in the comment section what you guys think. Again, if you guys have any questions, feel free to send me a direct message via Discord. And for those that are going to be asking what platform am I using, I am using the Webull trading application. It's free and available to everyone in the US, and it's the 5th link in the description down below. They do have a free sign-up bonus, so if you use my link, which is the 5th link, you can deposit $5 and earn up to 12 free shares just for signing up right now. So I appreciate your time. Hope that we're in a thumbs up. Please consider subscribing, and do not forget, we have a pretty interesting week this week, and we will be hosting our live trading sessions. And if you want to tune into those, that's going to be the 2nd link in the description down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.